We are back talking about returns this afternoon. Anytime you're looking at Kenya, the safest opportunity for you is with the government of Kenya through the central bank, T-bills or T-bonds. The best we have seen is 1 year is at 9.7%, 15-year is at 12.6%. Can you do better? Mr. Nahashon Mungai is an executive director for the Global Markets Desk at Standard Investment Bank. Welcome to the show, Mr. Nahashon.
Thank you, Mbila.
All right, so we're talking about returns. Help us understand, what returns are you seeing when you're sitting at the Global Markets Desk?
I can only talk about what we've done
so
far. So the average annualized return to date is 22.17%.
Wow. And this is for a particular product that you have rolled out to the market?
That's correct.
Okay.
And the name of the product is Mansa X.
Mansa X.
So Mansa X is our flagship fund at SIB.
All right.
So Standard Investment Bank is also SIB.
All right.
So we are the first ones regulated by the Capital Markets Authority as the first online forex trading money manager.
Oh, wow.
Yeah, so we are the first ones with that license. So under that license, we created the fund Mansa X.
Okay.
Yeah.
So what does this Mansa X hold? Is it foreign currency? Is it any other assets outside of currency?
So Mansa X predominantly trades in 4 asset classes.
Okay.
Currencies, commodities, global stock indices, and precious metals.
All right.
So under each of those asset classes, we have a wide array of assets that we trade. So under currencies, we're literally talking about pretty much almost all the world's currencies.
Wow.
But obviously, we concentrate on the major currencies.
Okay.
And maybe 1 or 2 emerging currencies.
All right.
Then under precious metals, we trade everything from gold to silver to platinum to palladium.
All right.
If you think about those 4 particular precious metals, we are trading them. Gold has been a big one for us this year.
Okay.
Under commodities, we trade assets like oil, natural gas, coffee, cotton.
Interesting.
That sort of commodities.
Okay.
Then global stock indices. So think about the S&P 500, the Japanese Nikkei, the French CAC 40, the German DAX.
Okay.
All those stock indices.
So Nahashon, you never sleep, clearly. You're always awake 24/7.
That's a good point because we are actually one of the, actually not one of, we are the only fund in Kenya that has access to markets 24 hours.
Wow.
So our traders actually work in shifts.
Okay, interesting.
Yeah.
So this is a very interesting product, but I'm trying to understand. If I come in to put my money with you under the Mansa X fund,
yes,
do you give me access to all of this, or do you actually have arbitrary decisions with regards to how you allocate the funds in the fund?
It's purely discretionary.
It's purely discretionary.
So the client will deposit funds with us and become an investor in the fund.
All right.
Then our traders will then make discretionary calls on what to do to give them a return.
Okay. Yeah. And of this 4 asset classes, what has given you the best return? Because you have mentioned oil, and there was a bit of a spike, a bit of volatility last week, or rather in the last 1.5 weeks following what happened in Saudi Arabia. Was that beneficial for your asset?
Well, it was, but not as much as it should have been, because most of the times when data like that comes out, it creates what you call a market gap.
Wow.
So unless you were in the position before, you might actually not catch it.
Okay.
So I'd say the asset class that has been very profitable for us this year has actually been gold.
Wow. Okay,
we were in gold from last year, from the time we started the fund, and that has been hugely profitable. We've also been running the S&P 500 quite a bit. Okay. And that has been also been a one-way move. I think the Trump administration has been very good for the stock market.
So anytime there's a Trump tweet, you just know that you're certainly sitting in the money.
Sometimes. Sometimes not. Because he can tweet about anything. And if he tweets and it goes against us, then that goes against us. But overall, over time, we found that certain asset classes have had pretty predictable moves.
Wow.
And that's around the stock markets have been pretty bullish, and metals like gold. Okay. Currencies have been a bit more volatile, and that's mostly because of the inconsistencies around issues like Brexit. So there's a lot of political risk around currencies right now. So it's much harder to navigate those waters. Okay. But we've been fortunate enough to do it correctly.
All right.
Then the issues around the trade wars between US and China. That means at any one time there will be a shift in global flows to certain asset classes.
Okay.
As people try to reorganize their portfolios.
Okay, I'm very interested. What was the inspiration of the creation of this particular product? Because I'm like 22% is certainly a very good return. I don't know whether it's guaranteed or not. But what was the rationale? Why create this for the Kenyan consumer?
I think it comes as a result of answering to consumer demands, like any other business. If you run a particular shop and people are always asking you about a certain product,
okay,
you probably now need to stock that product. So it's the same thing with Standard Investment Bank. One of the things we noticed was investors were getting extremely fatigued by the local investment choices available to them. So there was always a question around, can you tell us something different we can invest in other than just stocks
or fixed income?
Fixed income. Don't you have something else you can come up with?
Wow.
Of course, there has been a lot of investments and innovation around things like Next for the NSC derivatives, but even that takes time to pick up. So investors tell us, since you're not giving us options, we'll go into the traditional ways Kenyans know how to invest their extra coin, which is real estate.
Yes. And
then when now this slowed down or has started showing signs of slowing down, investors then started demanding for something else. Okay. So it was just a reaction to, it's actually a customer-driven product.
And that's a good thing, because even when you're talking about real estate, you hear yields of maybe between 4 to 8% if you're lucky. So 22%. Is this a guaranteed return, or is it market based?
No, it's not guaranteed.
Okay.
It's not guaranteed, and there's a reason for that. We obviously play in markets that can shift anytime.
Okay.
And therefore, in fact, maybe the return can be higher. Okay, it can be higher.
Which means it can also be lower.
It can also be lower.
Okay.
Because we are playing a market which is unpredictable. What we can say is that we have invested in very superior risk management software. Okay, and we use, right now we have international best practice in how we manage our risk management policies. My background is in banking.
Okay.
So banks trade a lot in Forex, and a lot of income in banks actually comes from their treasury departments.
That's
where
very
I've worked
true.
my entire life.
Wow.
And a lot of what I brought on board to this fund is very close, or rather has to even be at a higher standard from what banks actually deal with.
Okay.
Because there are certain reasons why banks can actually make more, because they have consumer flows, but based on what our risk exposure is, we are at a higher standard of risk management than even what you will see in some bank treasury departments.
Okay.
Yeah.
I like the fact that you're talking about banks. So it feels like you've actually brought the bank profitability model, or a part of it, from the treasury to the local consumer, the local investor.
That's exactly it.
Okay, so I think that's very interesting, with better risk. And I also like the element that you're saying you have been licensed by CMA. So are you licensed as an investment bank, or is this product given a different set of licensing?
It's given a different set.
Okay, and
so
what's the requisite licensing from the Capital Markets Authority?
All right, so the name of the license is the Online Forex Trading Money Manager. That's the name of the license.
Okay, and you're the one and only one who actually has that license today.
That's correct.
Okay, interesting. Yeah. So is there an element of competitive threats with other investment banks actually follow up with what you're doing? Do you see?
Pretty sure.
Yeah?
I'm pretty sure.
So
I don't know, but I'm pretty sure, yeah.
Okay.
I'm sure they would be.
Okay.
Interested.
I'm still stuck on this 22% return, which I think is a very interesting return. So how do we get access to this product?
All right, so how you get access to this product, after this I can share how you can reach us. Okay. Because you typically open an account like you'd open any other bank account. All right. So we'd take you through a quick KYC check. Then after that, you can then deposit funds with our custodians. So we use bank custodians to take your funds. Then with that, we can then go ahead and start trading for you. Okay, so it's purely online? It's purely online. But then the account opening, is it face-to-face? Yes, it's face-to-face. However, you can also go on our website and actually open the account through a web-based portal. Okay, interesting. Yeah. And how long has this fund been running from? We got our license in December last year. So about 8-9 months now. About 8-9 months. Okay, yes. And that's 22% annualized return. Yes, that's correct. Okay, how would we measure the traction from the market? Would we look at the number of people who've joined in, if that's information that you can share, or would we look at the assets under management, just to understand
It's demand-led, but what's the traction with regards to getting people to join this product?
We have seen extremely good demand.
Okay.
I'd say out of every 10 people we reach out to, almost all of them are interested and fascinated by the product.
Okay.
So that's really encouraging. A lot of them are signing on as well. We hadn't really gone full out marketing for about 5 or 6 months, mostly because we were really just trying to set up the back office operations, trying to make sure that our softwares that we were implementing were running properly.
Okay.
So we were really doing a lot of internal checks. So we started with a few trusted clients that we already had as an investment bank.
All right.
So those are the first ones to actually join the fund. Now is when we're actually going out to the public, and the response has actually been overwhelming, which actually confirms what we had already suspected, that Kenyans were hungry
for a return.
And I want to explain this return.
Yes.
Because a lot of people will ask, how is it possible that you're literally doubling?
Yes, because your money markets are 8-9%. All right, that's a good question.
Yeah, so there's a reason for this, and it's important that I clarify this. The first reason is obviously we have access to a wider range of asset classes than what other fund managers are trading. Okay, I mean, we are not limited. Not only are we not limited to asset classes like Kenyan fund managers are dealing with asset classes in Kenya, so they're dealing with Kenyan equities, they're dealing with Kenyan government securities, and maybe real estate products for some of the alternative fund managers. But for us, we are trading asset classes spread across the globe. Okay, so at any one time, there's an opportunity to trade out there in the markets.
Okay.
So there's always something to trade. Then secondly, our fund is a global multi-strategy, long-short strategy fund, meaning that the fund can actually make money when asset prices are going up, as well as when asset prices are actually dropping.
Okay.
Okay, so we are not limited to, we are not a long-only fund.
Okay.
Meaning that, ideally allowing us to make a lot more than
so you're more responsive to market opportunities.
Exactly.
As opposed to taking a position and waiting it out for a longer time.
Exactly. So we run a hedge fund model.
Okay.
It's exactly a hedge fund model. Any asset we get into is hedged one way or another. Okay?
How do you hedge?
We'll hedge by getting into derivatives that will take an opposite direction in whatever bet you had made on these other assets. So we run a very hedged approach to trading.
Interesting.
But what makes as real money, the real ingredient behind our 22% return is actually leveraging.
Oh wow, interesting.
Yeah, that's it.
Are you leveraging from the local banks, or where are you leveraging
No, we
from?
use liquidity providers provided by our brokers.
All right.
So our brokers will be the ones to provide us liquidity, and we use that liquidity to leverage.
All right.
And the CMA allows us to leverage up to 400 times.
Wow.
Yeah, but I mean, of course.
That's very interesting. I mean, it's interesting to hear about this product because it's a global product, and our regulator and our environment is always accused of being very dogmatic with regards to their approach to risk and investment. So that's very fascinating.
And this is where I think a CMA needs to be given a lot of appreciation. Because not only did they regulate this product, but they actually used almost the same kind of regulatory framework as what you see in global markets like the FCA, the Securities Commission. We are actually operating on the same global best practice. So you could be seated in New York or Washington at this point in time, but you're only seated in Nairobi. Exactly. Actually, we like to say that we are a global fund with a local presence. Oh, fantastic. That's a good way to look at it. Yes. So 22%, that's the sweet spot. And you're saying you also take advantage of leverage opportunities to tap into market opportunities. Yes. How do I look at mitigating at risk? If I'm somebody who's putting my money in, say, $1 million shillings, and I put it into your fund, I can quickly see the 22% return. Yes. What safeguards do I have before that becomes -0, -10, -20, -30? Because hedge funds do blow up. Yes, absolutely. We have obligations, and some of them are contractual because we draw up client contracts with our investors, and we outline some of these things, how much drawdown we can hit your funds with, and then our clients have to agree to this. But in reality, what investors actually do is really trust us a lot, and what we have done is we use one of the most conservative approaches to trading. Okay, I understand that hedge funds blow up, but some of them will blow up because of excessive use of leverage or extreme concentration of risk on one particular asset class. Because it's easy to be tempted.
Yes, it is.
By certain asset classes, because some of them will move, like you said, oil will spike in a day, and if you had leveraged that 20 times, you know, or if you're on the opposite side. Yes. So we use a lot of, you know, portfolio diversification tools, a lot of internal limit policies. We use a lot of automated stop loss trading styles in terms of how we get into our trade. So that's what I'll tell clients is a real protection. The real protection is not contractual. The real protection is how the fund is actually run.
Okay. Yeah. Maybe just circling back on that, would I imagine, or would I be correct to imagine that there is an investment committee that sort of predefines your limits and holds you accountable to this?
Absolutely.
And then there are regular checks and balances internally.
Absolutely.
Okay.
Yes.
I think my greatest comfort at this point, slightly better than what we hear out there of the pyramid schemes, is the fact that you have the CMA, Capital Markets Authority, oversight, and you also have an internal board and an internal system of evaluating. That certainly gives me considerable effort. We'll take a quick break. The NSE is about to close. Look out for the closing bell. We will be back shortly.